Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here today with
Dan Hussey.
We've got some stuff to cover. As usual, we'll also be digging deep into grain and livestock markets, especially looking at the bean market this week and updating you on how best to navigate these types of market movements and environments. Dan, here we are, X number of days into the any minute now, we're going to get a Chinese deal. It feels like the market is thinking about that, but I only ask because I know you live in a Chicago suburb, and so if you're going to go out on the weekend and get some Chinese food, what are you guys going to get? It's going to be like some Kung Pao chicken,
Mongolian beef, hands down. Mongolian beef. Yeah. Oh yeah. Yeah, maybe some pot stickers. I don't know if we'll have time.
Had some sushi last night.
Or room. Yeah, we're more sushi family. I mean, don't get me wrong. I love some good Chinese food. I'll go to town on Lau Mein, but we have a favorite sushi place nearby where we also indulge in some pot stickers from there, some crab rangoon from there as well.
Always good to talk about Chinese food.
Crab rangoon.
But the radio man asked me today, do you think at the end of these negotiations, the agricultural industry, ag in the U.S. will be better off? And that question caught me by surprise because you get caught up in the day-to-day.
Yeah, how far of a time horizon can we push that out to, right?
When this is all said and done, do you think we'll be better off?
How far out can you push that time horizon, right? And how long does it take to adjust in this period of reset, as I like to now kind of talk about it? I think we are going through, just a global upheaval in terms of relationships, trade deals, trade balances. And over the next couple of years, I think we're going to see a reshaping of how those have affected, global economies because the status quo has changed. And so now going forward, we're kind of at this reset point with China. Ideally, it gives us a negotiating platform where we had kind of a trap deal, before. So how could it get worse, right? China needs what we have a lot more than we need what they have. And I say that from a fundamental humanistic, survivability standpoint. We're a nation that is commodity rich. We are food, fresh water, and energy self-sufficient if we completely wanted to be. China is not. And that's a power place, stance that we as a nation can use and are going to stand and utilize, and gives us a very strong bargaining chip. The problem, of course, is that short term, Joe, right? The pain that we're going to see in the near term, but the price that we're going to pay as consumers as things, as we get to some kind of new normal. I'm optimistic, right? We had these two administrations, the Xi organization in China and the Trump administration in Washington, came to a deal and got things done in the last time. Last time this administration was in power. I'm optimistic they'll do it again. But boy, is there a lot of jawboning and hot air going on. We're seeing flip-flopping of that narrative in the news, with China coming out today and saying, hey, don't go around saying that we're making strides to negotiations when we're not. And it's like, well, come on, people, what's going on here? And it doesn't, at this point, by the way, folks, if we go to 1,000% tariffs, who cares? Anything over 100 or 200% is just, no one's going to do business at those prices and those costs anyway.
Late in the day, I saw where one side or the other was reducing. I think it was the Chinese were reducing their tariffs already on some incoming U.S. goods, sure. Aerospace stuff, some electronics, and so
whatever really, they happen to need, right?
And really, as we move closer to some sort of resolution on this, you start to see how this is really going to work, and that maybe ultimately this isn't so much a negotiation about trade in and of itself as it is a negotiation about structural issues in each country. And as the dust settles and we come away with a slightly different deal, and a bit more understanding. And, to me, I'm not so concerned about how we get there, and the road's going to be bumpy and there's going to be a lot of yelling on both sides of the road. But what I'm more concerned about is when we get to the end of the road, what does that look like? And I am optimistic that at the end of the day or the week or the month, we find ourselves in a position where the Chinese continue to be a trading partner. We continue to have a relationship that is fruitful for American agriculture and other American business. And we can all get back on the path of building a more prosperous and plentiful future for people in both countries. Do you know what I mean? It seems
Absolutely.
to me like that might be where we're headed.
And I think there is a win-win situation, right? That you're getting.
It seems that way, right? There's a serious possibility that both sides can come out of this. And again, the politics of it, are getting have gotten maybe a little carried away. And then once they get back to the simple human perspective, we can get some deal done. And just like you said, win-win for everybody. Everybody can look good. Everybody can look like they got something done. And we can go back to being happy and healthy, I think.
Yeah. And I want to leave everybody with this one last piece of optimism. How many times, right, has the Xi administration in China, how many administrations have they seen turnover in the United States, right? Renegotiating these deals and these trade deals and stuff. I think it's becoming commonplace because in the US, we're flip-flopping in administrations from left to right. We've rewritten the rules and rewritten those, the things of the prior, torn down the old, rebuilt the new. How many times over in the last 10 years? This is almost becoming commonplace. Trump's doing it just with a lot more drama.
We love it. It's called democracy, right?
Right. Absolutely.
Before we start,
folks, it's what we signed up for.
Right, exactly. Before we start, we want to let you know that if you're interested in hearing about grain market movements grain market movements daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert. It's totally free. It gives you a chance to connect with us personally. If you have any specific questions about the markets or agricultural commodities in general, be careful. We'll answer them. Link is in the description below. Sign up for that. Totally free, zero commitment. Dan, I've been getting some really great feedback about the work Ted does with this hotline. People are saying they're able to call in every day about 2 o'clock, right? From time to time. You think to yourself, I wonder what Ted thinks about this. And you just fire up the hotline. What are you hearing? People saying anything?
Yeah, people love it. It gives you that quick 5-minute look at what went on in the market. Ted's got such a renowned approach to delivering those, broadcasts. He's been doing it for years. He's probably, I think, the best in the space at breaking down exactly what happened. Happened in a day in that quick remark.
It's a beautiful thing. Folks can sign up. There's no cost. There's no obligation. Totally free. Zero commitment. Dan, we got to talk about it. And usually we wait until the end of the story here, but it almost bears discussion right up front. Feeder cattle, you and I were talking about May versus August. You see most of the open interest in volume in May or August?
August. Sorry, okay. I wasn't sure.
No, that's okay. That's okay. So
hanging.
The May and the August, essentially, I think, technically the same story on the chart, right?
Yeah, if you really look here, great. Just to prove to everybody here, open interest here is bigger in our August contract, right? And our volume about, to the multiple of about 2 to 3 times. So we are definitely into the August.
If you're a technician worth your charting tools, you're already looking at August, right?
Yeah, technically speaking, right? And actually, if you're looking also at a continuous chart, if it's time based, it may be looking at May. But if it's a volume based continuation chart, it's going to be showing you actually the August contract there too. So pay attention to that. Usually they're volume based or open interest based, so it should be technically showing you the August contract anyway. But yeah, here pushing up, we're getting to that contract high around that 295 figure. That's a big deal here, man. Having come down, held that old resistance. Now support.
That box shows us how far we've come, right? That box was a concern as we came down there and held it essentially, and have launched right off of that support area, well above all the moving averages. I mean, look at those moving averages are just so spread out
Yeah, and here's that continuation chart to kind of give you an idea too, just right of like where you are in the bigger picture. This area was just a small confluent zone right back, this year. As you go back, multiple years in the past, that 270 to 275 area was very much resistance. We broke out of it, and then we came back down and tested it. Now we're back to highs. It's a kind of an incredible move for the feeder cattle.
Opened the week at 286.90. The high was 290.95. Low 285.10. Last trade 290.52. That's up 367. Funds are long feeders. What more can we say other than, my goodness, how high can it go? Dan, just looking at that chart, if you just use the fingertip measurement, I mean, if we move out of this consolidation area, goodness gracious.
Yeah, I mean, we don't even have to use just a fingertip. Let me get, we can be super fancy these days and use an actual rectangle here. Let's just imagine, right? I think what you're saying here is like, you go, I mean, you could launch all the way up into the, 315 there, if you're looking at, if you want to do, a channel, I would imagine a channel puts you somewhere up into that area as well. So, I mean, break above 300, right, is the name of the game and the thing to be watching for on the feeder cattle.
Somebody was saying today that the venerable cattle commentator, fellow by the name of Corbett Wall, which I'm sure almost all of our listeners are familiar with, right? That gentleman is saying that you're going to have to take your feeders out to your cattle out to 1,700 pounds.
Holy cow!
To get it to pencil out. I mean, that's a pretty big number, isn't it?
That is.
Shout out to Jordan for sending me that, but that's 1,700 pounds. Shout out to Corbett Wall too.
I mean,
does a great job.
This all has to speak to demand. Then I mean, this can't be happening without demand.
It can't happen in a vacuum, right? And so
exactly, these markets might be, funds might be able to push them around, and there might be enough money out there, but we've had enough of a volatility scare elsewhere that I don't think people would be messing around and speculating in cattle and driving markets up at and squeezing a market higher at a time where there isn't a reason for it to be doing so, is what I'm getting at as well. Absolutely. Right? Like everything's happening for a reason.
How about some June fats? Opened the week at 204.25. The high was 208.80. Low 203.40. Last trade 208.25. Up 417.5. But my notes say funds long AF. And that AF stands for as heck. Funds are long as heck. I don't know if there's any kind of record there in terms of that fund position, but they are not messing around. They don't seem to want to come out. That's pretty solid.
No, and we're only just getting to overbought conditions in that daily RSI too, right? We do have waning volume here, getting to overbought conditions. So, okay, I do have to say, is this getting a little long in the tooth? Or are we getting a little overdone and overcooked? Maybe, but it's an uptrend until it's not. And over the last 2 days, it's been a little bit of a bull flag. And hey, if feeders are the leaders, we're up 1.5 pennies in the feeders today. Where was the fats rally, right? We need almost that breakout to new highs. And maybe we see the feeders head towards 300 with that occurring here on a breakout of that June fat towards 210 or something.
It's really just to say it again, that is just incredible. Just incredible.
Yeah.
Now, so Tale of Two Cities, we were saying earlier, right? That brings us to July wheat. Opened the week 562, high 586. We've got the handwriting of a doctor from a different country. Low 539 and a quarter. Last trade 545, down 17 and a quarter on the week. Funds are short about 101,000 contracts. So not shy about building that short position in wheat. Technically, it does not look great, but last couple of days worth of price action speaks to, and Dan, I'm just looking at a daily chart here, but I'm looking at another higher low. So if we hold this low from yesterday, which if you can help me, that was what, 540?
40. It was almost 539.
Yeah, 539 and a quarter
that week.
Yeah. And so if we hold that and we get back out above those moving averages, you now have 1, 2 higher lows off of that swing low down around 530, I think that was. And we can start chewing through those moving averages if that's where wheat's going, right?
Yeah, absolutely. You've got a divergence is what Joe is talking about here, and this is also something you can look at for confluence in the RSI, right? You had an extreme low here. Actually, you've had kind of a couple of them, right? You had one push down here, the 544 back in March. You had that oversold condition in the RSI. Then you had the low happened here, and the extreme push in the RSI. And then now you had this last push down, and it doesn't quite go oversold. And if it comes back up and we get back above that 18-day moving average, and you've now held a secondary low, that's called divergence. And then you look for that pushback above this prior high, and of course at this point that 100-day and 55-day moving average up around 570 area, which is going to be probably the resistance area to the upside. So hey, at the very least, you got to say, hey, support down at 540, resistance at 570. You've got some kind of 30-cent range going on in the Chicago July week.
And so help me understand, if I'm looking at that RSI and we've seen two with price pushes to new / extreme lows followed along with that RSI dipping well below. And now here we are, we've got a price push, but the RSI is not going with. Does that speak to the possibility of real buyers underneath there? And that's why you're seeing that higher low? And the RSI is kind of pointing that out,
right? It's divergence. Each little push lower has a little bit less momentum and a little bit less energy, and now it's resulted in not actually even making a new low. And so that divergence, coupled with the loss or this kind of upward sloping trend line on the RSI, you're absolutely right, Joe. If this starts heading higher, it could be kind of rather explosive and a short covering rally, because you've built up into quite a short position in the market as it's lost. Sellers have continued to build into short positions, but the market hasn't made progress lower. So if we start to go higher, it's going to start to run their stops and take them out.
And so again, when we're talking about the funds here, it seems that the fund trader category has maybe changed over the course of the last couple, 2, 3, 4 years. But historically, you would look at a situation like this where you get some sort of downward movement based on whatever fundamental or whatever technical action, and you don't
and at the end of the day, we're really just talking about speculators, right? Like, we're talking about the people who don't have a commercial interest. They're not delivering and taking delivery. It's speculation. They're going to get out of their position is for pure profit or loss.
And here they are leaning into it aggressively. That this 101,000 contract speaks to that. They continue to build this position, but they're not able to press. The market is not getting pressed lower. And so they recognize that and begin to get concerned and look for opportunities to take profits. And that can feed on itself, right? That's not necessarily hard and fast rule, but once the funds are in an environment where they're pressing the market does not result in much lower prices, they have to recognize that maybe they're now swimming upstream and it's gone down as far as it can go for now, potentially.
Absolutely.
How about some corn? Opened the week $4.91 in July. This is July corn, a weekly update. The high was $4.95. The low was $4.77 Last trade was $4.85 That's down 4 3/4 on the week for July corn. Funds continue to buy there. Up. I'm not sure what we're up on that position, but it's increasing. We're about estimated to be long 133,000 contracts in corn. This morning's announcement, 235,000 metric tons to Mexico, half in the 24-25, the other little less than half in 25-26. Nice exclamation point on discussions about demand for corn and corn exports, which are chugging along rather nicely, I would say.
Yeah, they really are. I think that there's I think it's pretty impressive, actually, given this last year, we've seen more or less, right, a lot of, supply concern, or I'm sorry, demand concern creep up in the way of some of these trade deals and tariff concerns. But yet we're still seeing things like corn fly off the shelves for all intents and purposes. I know this last week we saw some cancellations in wheat and what have you. It's also a slow time of the year for exports. And now that we know that South America has more or less sold out of everything that they had to offer, we're going to see other export partners come and look for, demand from or at their supply, I should say. And we'll see demand from other nations probably. So corn being one of those that we'll probably see go to more countries than just Mexico this year, but higher highs and higher lows looking pretty good. 478 and 3/4 for May corn here. Pushing a little higher. July corn there, 485 into the close, above the 100-day, 55-day moving average, excuse me, the 18-day moving average at 481. Staying above that level is pretty key. The 100-day there at 478 as well. Love to see this market now push back above this downward sloping trend line against the highs. That would, constitute to me, the breakout towards, this old high would probably be underway and would be looking for that. My concern, though, is that in this old crop or new crop contract, we're still sitting in this tight range between 55-day, 100-day, and right on that 18-day moving average in this, what is really kind of a bear flag right now. So two slightly different looking charts. If you ask me, you've got a bull flag playing out or a pennant, right? You got the bull and then the flag, and then we might actually be breaking out of it here in old crop corn, and then new crop corn with a 2-day bear flag after quite a steep downturn, right, where support's holding right where it needs to, but boy does it need to hold.
Yeah, this week you had some talk about maybe increasing the amount of acreage planted to corn this year. You've had some talk about beneficial rains in South America, and that new crop really took a bit of a hit off of those concerns. And then as we got later into the week, and we're talking about finding new homes for U.S. agricultural exports, the ethanol numbers certainly didn't hurt anything. Ethanol,
no, those are pretty
solid
pretty
numbers, right?
If
pretty
anything.
Solid numbers.
Yeah.
Just further underscoring, not only are you doing bang up business here in the United States, but we're also doing a really good job of getting that corn out to the rest of the world. And every week, this old crop corn gets more scarce and more scarce. And so you've got a bit of a story here: old crop versus new crop. New crop, of course, wants to look at the potential for this large safrinha crop, and every year it seems like this year we're already trying to figure out where we're going to put our trend line yields. In terms of the corn is already harvested when it hasn't even really been planted yet. But that seems like a narrative that we just have to chop through to get to where we're really going to go.
Right.
How about beans? Open the week, 10.50 1/4 high, 10.67 1/2 low, 10.40 3/4 last trade, 10.59 1/4 up 11 1/2. But dare I say it, breakout. That is a heck of a chart. Up 11 1/2, long 34,000 contracts. I think that's up from last week. Please fact check me on that. But man, what a good looking chart.
Yeah, right. You're still a little concerned that you're below that $11 mark, right? In terms of just a longer time frame, daily, weekly structure, right? But Joe, you're not wrong. You had some consolidation here for the last couple of weeks below that 200-day moving average. We were building up. We finally broke out of it here. I mean, there's not much in the way of resistance again now until that old high back in February, which puts you back around that $11 mark, which, not to get too excited, but, maybe there's a reason to get a little excited about soybeans here.
Feels like that could be where we're headed right now. Meal, not really the same story. Open the week, 304 in July meal. The high was 305.30, low 294.30 last trade, 298.50. Down.
Not a bad close for the day, though.
No, not bad at all,
I
right?
mean,
down 460 on the week. We're short here, just like wheat, short almost 100,000 contracts, short 95,000 contracts by the funds. And that look here on the chart speaks to maybe potentially higher prices next week. You hate to come to that kind of conclusion off of 1 day's price action, but in the context of what's going on in bean, in the rest of the bean complex, I mean, the question that I have, and this is just a general question, and maybe this is something we'll edit out, but can we speak to what is going on with meal? We should be able to. are we having a hard time finding a home for this meal? Is this a bird flu thing? What's really happening here? You know what I mean? And I don't mean to put you on the spot. I'm putting myself on the spot. But it seems to me like if we get a little bit better at moving this meal, either domestically or in terms of exports, this chart could change real fast.
Yeah, that's where that's the thing that I'm kind of perplexed by. Like, is meal just going down because oil's going up right now?
Is there a spread there? Right? Is there a spread there?
Is that what's going on that like I'm not paying attention to and I missed? Because hey, oil was up decent on the day there. It obviously fell back down and reversed. And you could say the exact opposite about meal. So I'm kind of like, there's obviously a spread there. The cracks, the crush spread is obviously important. I haven't been paying very, very close attention to the dynamics of it recently, and particularly at these two levels. But when you look at these two charts, I mean, they're both reversal charts for the opposite reasons. Intraday at least. So that looks like a good reason to maybe sell bean oil. This looks like a decent reason to buy bean meal. I'd rather see it back above 300 in that July, back above that 18-day moving average. Then you find yourself into maybe a good reversal back inside this larger range we've been in. But let's face it, meal has been kind of in this precipitous downward trend. It's been losing momentum. At some point, I think we're finding value in where that real demand is down here, because otherwise we'd be falling through the floor. And that just isn't happening on the meal. It just doesn't want to go any lower. It doesn't want to rally, but it seems like it's found where the buyers over the bigger, longer term are. The oil here is becoming more and more impressive, having broken above the highs of the last 3 months now in the last couple of trading sessions, coming back down off of that 51 area and kind of reversing on the day in July. Bean oil, but still a really strong move up. We're now above this old resistance area, so you're going to want to see if it holds above 49, and if it can, maybe we're starting to trend higher. And if we're starting to trend higher, that's being led by bean oil, because keep in mind, folks, beans over this last couple of weeks, this has been an bean oil rally. So interesting to see if that dynamic continues.
Open the week at 448.26, high was 51.13, low was 47.83. Last trade I saw for July bean oil this week was 49.81. That was up 147. Oil, they're long about 51,000 contracts, and dare I say it, breakout here on the chart. Now, in the overnight, we rallied up over 51. Not uncommon, right? So we rally up just to see who wants to have a sell stop up there in the overnight, and then they bring it back down. Typical price action for these kind of breakouts. But interesting, if I look at this July bean oil chart,
it's just old fashioned back and fill, right? You it's not necessarily a gap up. They have to back and fill, but you broke through, and now you come back to test where you were, make sure that you want to stay there.
Show us an 18-day though. You know what I mean? That's the challenge with this chart is that, okay, so your 18-day comes in at like 47.68. Am I right?
But project that 18-day up there. Give us a day or two,
Good point.
You're going to be right there with that a test of that area anyway. So test of that 18-day coupled with a test of this old, supportive area now is old resistance now support. I agree with Joe. It's going to be around that 49 area, I think, in my humble opinion, if it all comes together nicely, 49 to 48. We find support there and we turn higher. Breakout.
Really something to see here going on in beans. Kind of caught by surprise a little bit, right?
If it doesn't hold up there, right? If it doesn't hold up there and it falls back down, I mean, you're back down into this old range you were in as well.
And the other thing,
cover all our bases.
You're going to reduce the amount of used cooking oil coming into the United States. That's a no-brainer, right? I mean, one way or the other. They're really. You would think that they're really drawing to a close.
I wonder if that isn't a big reason why bean oil isn't rallying now. Because this is also now an anti-canola thing, right? Because canola, which has snapped back very well since it got we went limit down on those Canadian newses. I wonder if this is kind of a anti-anything that isn't going to be U.S. dominant in this space. I don't know. We'll see.
And you've got some clarity, hopefully, coming down the pipe here about what the U.S. biofuel policy is going to be and how that's going to work out. And it looks like it's either going to be good or great. And that I'm very hopeful. We are very hopeful about that, right? Yeah, optimistic about that. But what I want to say, Dan, and correct me if I'm wrong, is that this strength in both beans and bean oil is occurring in what I thought was going to be a rather tough period for the soy complex in general because of this massive bean crop. I mean, you and I, you can see in your head the picture that Karen Braun would post about all the little triangles splashed out onto the ocean, making their way out into the world, right? And so this is happening in a context of an a rather large South American bean crop, rather large Brazilian exportable, fully exported bean crop making its way out into the world. And here we are standing tall, and that's not all in the bean complex.
Yeah, and because I think the reality too is if you start to play the tape forward, and China just bought everything from South America, and China's all fed, great. That means the rest of the world's going to have to come to our dinner plate to get fed. And then another year from now, if we haven't reached a deal, it means China yet again has to rely on just one nation in one area of the world for their agricultural purposes. And if they have a miss next year or there's any weather concerns, now we've got a big problem, right? So like, this is not like a small ordeal that we can just pretend and dance around that, and China, there's no victory lap for China without a trade deal on the table with the U.S. Let's put it that way. Let's think about it too. Like play the tape forward. There is no victory lap without that. So let's face it. Let's get to that win-win-win scenario, and I think we will. I have the utmost, trust that the Trump administration, as dramatic as they like to begin conversations and begin the dance, they oftentimes bring things back, and there is a rather calm and what's starting actually to become kind of predictable end to the chaos.
From your lips to God's ears. How about that?
Yeah.
All right. It's what everybody's waiting for. All three listeners.
Question of the week.
Question of the week. Pancakes, Dan, or waffles?
Pancakes all the way. I'm sorry. I mean, like waffles are good, but like I love pancakes. Everything about them.
I'm just gonna say yes. How about that?
It's true, right?
Whatever you got.
Like if this is the decision you have to make, life is good, right? Like let's all agree to agree.
Bring them both. Bring me an extra. Bring me an extra side of bacon.
Because I wouldn't say no to waffles either.
Right.
Like I'm not an anti-waffle man. It's just like I'm a pancake guy all the way.
Real butter and then copious amounts of real maple syrup. Just poured all over that.
That's the real question, right? Is this really just a vehicle for butter and syrup for you at the end of the day? And I think that's what we really need to get down to, right?
And so much maple syrup that the people at the next table over in the restaurant, if you happen to be dining out, they look at you like you are really not going to put that much maple syrup. Oh, yes, I am. Yes, I am. And I'm going to stab whatever it is, waffles or pancakes, with a fork repeatedly so that the maple syrup can soak in, Dan, and then be completely absorbed. And then we can eat all the bacon and all the waffles and all the pancakes. Yeah. Now I'm starving. Thanks, Carter. Carter, what about you? Pancakes or waffles? Carter says pancakes. Dan, take us out of here. Let's get the weekend started.
That's one heck of a question, Carter. I expect just as many good ones as that in the future. But thank you for listening, everybody, to our Zaner MarketCast. If you need more because you just can't get enough of us, you can always sign up and follow us here on Facebook at the Zaner Egg Hedge, on Twitter and LinkedIn at the Zaner Group. If you need a question answered right here on air, you can do so at the link in the comment section of this post. Follow the instructions and we'll get it answered here. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. And we will be back with you as price action develops, everybody. Have a great weekend. We'll see you all next week.
Have a great weekend.